So good afternoon all. Our group consists of me, Inka, Nico, and Johan are going to explain about the assignment, which is about the comparison between revenue and expense based on PSAK. So the first part I'm going to explain is about the revenue. So the definition of revenue based on PSAK 23 is the gross inflow of economic benefits during the period arising in the course of the ordinary activities of an entity when those inflows results in increase in equity other than increase relating contributions from equity participants. So I have one example. For example, if a travel agent sells a holiday to a customer for $1,000 and the travel agent make a commission for $100 and the customer pay in total of $1,100. And actually the travel agent will pay $1,000 to the company that actually sells the package, and the travel agent will recognize $100 as the revenue. So now the aim of it is the accounting treatment of revenue arising from certain transactions and events, identify circumstances when revenue recognition criteria are met. I'm going to explain later about the revenue recognition criteria. And the last one is it provides practical guidance on the application of revenue recognition criteria. This all also based on PSAK 23. So now the third part is about the revenue measurement. Revenue is measured at the fair value of the consideration received or receivable. This is based on paragraph 8. And the fair value is the amount that's used when an asset could be exchanged for a liability settled between the parties who once and have knowledge in a normal transaction. This one is based on paragraph 6. So it's probable that any future economic benefit with the item will flow to or from the entity. This is more likely than less likely. An item has cost or value that measured with reliability. Reliability is free from material errors and bias and can be depended upon by users to represent liability. So the next part is the recognition criteria. There are 3 recognition criteria. The first one is selling of goods based on paragraph 13. So the selling of goods is selling point is when you recognize the revenue. What it means by selling point is when the product is delivered. And the second one is selling of services. Selling of services is service revenue. Is to be recognized by reference to the stage of completion. Or it's recognized in the period when the service is rendered to the customers. The third one is interest, royalties, and dividend. This is based on paragraph 28. So interest is charges for the use of cash or cash equivalent or amounts due to the entity. Meanwhile, royalties are charges for the use of long-term assets to the entity such as patents, trademarks, and copyrights. And the last one is dividend. Dividend is distributions of profits to the holders of the equity investments in proportion to their holdings of a particular assets. Now for the exchange of goods and services. For exchange of goods and services with a similar nature and value, the exchange is not regarded as a transaction that generates revenue. And for exchange of goods and services which are not similar, the exchange is regarded as a transaction which generates revenue. This all is based on paragraph 11. And now the next topic is going to be explained by Nico.
So to continue Inka's presentation, I will be presenting about expense. So expense defined by the FASB Statement of Financial Statement Concept number 6, paragraph 80 is outflows or other using up of assets or incurrences of liabilities or a combination of both from delivering or producing goods, rendering services, or carrying out other activities that constitute the entity's ongoing major or central operations. But based by Kerangka Dasar Penyusunan dan Penyajian Laporan Keuangan paragraph 70 Standar Akuntansi Keuangan year 2007, expenses is defined as decreases in economic benefits during an accounting period in the form of an outflow or depletion of assets or the incurrences of liabilities other than those relating to distributions to equity participants. So, to differ costs versus expenses, the Australian Accounting Standard Board has define cost as a amount of cash or cash equivalent paid to acquire an asset, while expense is decreases in economic benefits during the accounting period that results in a decrease in equity. So relating to the conceptual frameworks, the differences between these two can be found in the position in the income statement and also by the time of occurrence. So to explain this, I have prepared a case example. So the example is a company has a cost of 10,000 for purchase of a building and a useful life of 10 years. So the cost itself here is the $10,000 used to acquire the building or acquire an asset as stated before. And the expense will be recorded as a depreciation stated by the useful life of 10 years. So in relation to the time of occurrence, the expense is recorded after the cost. So the cost will be the first to occur, which is the $10,000, and then the expense will be a depreciation recorded at the end of each year of usage. So for the expenses recognition, according to the US GAAP and IFRS Framework 95, expenses are recognized first in the income statement and also on the basis of direct association between the cost incurred and the earning of specific item of income. So for the allocation of expense, accountants first must decide whether a cost pertains to future revenues and therefore should be deferred. The second is whether the cost pertains to current revenues and therefore should be written off against that revenue in the current period, and whether a cost, although incurred and not yet paid, is related to current revenues and therefore it has to be accrued. So the three basic methods of matching is associating cause and effect, the systemic rational allocation, and immediate recognition. The example for such, systematic and rational allocation is depreciation as one of the example, and for the immediate recognition is such as advertising expense or such things like that. So for the next topic will be presented by Johan.
So moving on to the final part of our presentation, I'm going to explain about the development of new standards in revenue recognition in Indonesia. So as Ikono have explained, the standard that most companies in Indonesia use in recognizing their revenues, they use PSAK 23 or the Indonesian GAAP number 23. So early in the 2017, the Accounting Board of Indonesia, or probably the International Accounting Federation, they released new standards in which they released IFRS 15 to replace the International Accounting Standard number 18, and that, as that have been said, Indonesia then will try to implement or adopt this standard as well. So this presentation refers to a pocket guide that was prepared by Ernst and Young. Here they have two scenarios in which they suggest that companies prepare themselves from 2014 to 2015 with a time span of 1.5 years to adjust to these new standards, and by 2016 then they will have knowledge on how to adopt these new standards in their everyday practices. And that was scenario A. And the scenario B is companies try to prepare themselves for 2.5 years starting 2014 until 2016, in which in 2016 they still use International Accounting Standard number 18 in recognizing their revenue and disclose their financial statements, and then over 2017 they move on to adopting this new standard which is IFRS 15. So, okay, so the standard is going to be effective in January 2017, and early implementation is recommended by EY and by us. So these are the implementation steps and the impacts of the usage of IFRS 15. The steps are: first, identify the contracts with the customer, which contract. And second is to identify the separate performance obligations in the contract, determine the transaction price, allocate the transaction price to the separate performance obligations, and recognize revenue when the entity satisfies the performance obligations. And now I'm going to discuss about the impacts of these new standards. For starter, I put four impacts in which these standards will have impacts on. But basically, the adoption of this new standard will have more impacts than this. These are some of them. And first, it will have impact on training. So companies will be required to develop training concepts, roll out of training sessions, also on reporting, investor relations, and compliance. To sum it all, it will have impact on the KPIs of the companies, the key performance indicators. And for reporting, adjustment of management reporting, including IFRS 8 as well. And for investor relations, there will be earnings volatility and also a problem in communications. So we're going to move on to the certain entities or probably industries that will have issues in trying to adopt these new standards. We are going to discuss four specific industries, but there are actually more than just these four. And the specific issues, first of all, is for telecom entities. So, and these companies might want to analyze whether the use of portfolio approach would be appropriate, and free goods and services as well as options for additional goods and services for discounted price might be separate performance obligations. And then issues for technology entities, activities of the licensor after granting the license, which significantly affect the granted IP, might have consequences on the timing of revenue recognition. And renewal options might be separate performance obligations. And then the issues for automotive entities and retail and consumer products entities. The new standard requires an evaluation of all contracts as separate performance obligations may be identified. Cash incentives and incentives to provide free or discounted goods can be separate performance obligations rather than marketing incentives. And for the final part, issues for real estate entities. By determining the transaction price, the main challenge will be the determination of the variable consideration, taking into account a variety of factors. And last, significant judgment will be required when revenue is recognized over time. So that concludes our presentation. We hope this gives you knowledge, and thank you for your time. And if you have any question, please ask.